do is make money, I don't do shit else. Wake up, count racks, and I count that again. Broke boys talking, I don't hear what they say. Got your bitch on my line, she just want what I spend. All I do is make money, I don't do shit else. Middle finger up, yeah, fuck how you feel. If it ain't by the bag, I don't pick up this cell. Stack it up, flip it quick, I've been living too well. Walking, drip loud, whole fit disrespectful. Talking about money, little boy, that's my schedule. I don't got time for no broke ass lecture. You counting opinions, I'm counting extra. New chain coat, make your neck feel jealous. I don't say please, I just say send it. Make account look like a goddamn fetish. Everyday payday, I meant that I said it. You flex online, that shit look pretending. I just hit deposit, that shit never ending. You worry about me, I ain't worried about nothing. I spent your rent on some dumb shit for fun, yeah. All I do is make money, I don't do shit else. Wake up, count racks, then I count that again. Broke boys talking, I don't hear what they say. Got your bitch on my line, she just want what I spend. All I do is make money, I don't do shit else. Middle finger up, yeah, fuck how you feel. If it ain't about the bag, I don't pick up the cell. Stack it up, flip it quick, I've been living too well. Hey, petty as fuck, yeah, I'm flexing on purpose. Bought the same chain twice just to make them feel worthless. You saving receipts, I'm just buying for fun. You waiting on checks, I got 10 of them coming. Bitch said she loved me, I told her I doubt it. You love how I spin, yeah, don't talk around it. I'm lit every day, I ain't asked for permission. I'm breaking the bank and I'm making new digits. Too many commas, I'm losing account. You making excuses, I'm making it count. I walk in the room and it's quiet as hell, cause everybody know I've been ringing a bell. Money on my mind, I don't sleep right. If it ain't a bag, it don't feel right. You broken, you loud, that don't seem right. I'm rich and I'm rude, yeah, that's me, right? All I do is make money, I don't do shit else. Wake up, count racks, then I count that again. Broke boys talking, I don't hear what they say. Got your bitch on my line, she just want what I spend. All I do is make money, I don't do shit else. Middle finger up, yeah, fuck how you feel. If it ain't about the bag, I don't pick up the cell. Stack it up, flip it quick, I've been living too well.
Oh, brother, oh, brother, oh, brother. Good morning, good morning, good morning, and welcome back to another episode of the Matt Kohrs Show, where we are trying out a oldie but a goodie when it comes to the world of Lucky Buffalo trading shirts. So we'll see if this particular shirt, which it's not a new reveal, but it's been a hot minute since I wore it because I actually lost it in my closet. So found that, and when I say I found it, actually Piper found it last night. And when I saw the market this morning, I realized there is no time like the present to try to save all of our portfolios. So we're rocking a oldie but a goodie Lucky Buffalo shirt. I highly recommend you put on your luckiest of all apparel today to survive what is apparently a pretty sizable sell-off. The SPY currently in pre-market trading after losing 0.5% yesterday, down another 0.4. The Nasdaq, after getting hit a little yesterday, technically down about 0.2, down now another 1.2. VIX is up around 4% this morning, and the market's taking a hit, but tech stocks are getting cooked. So my job this morning is to break down what in the world is going on. But the TLDR is a little bit like this. Do you guys remember, rewind about 24, 23 hours when we were sitting there and I was all like, hey, this whole Iran ceasefire deal passed, it expired, there's no more ceasefire, and the market seems to not care. I don't know if the market had a case of Mondays, maybe if the market itself forgot that it was open, traders forgot that there was a thing going on, super low volume, and not really a logical reaction to what the news was. And then I guess someone told it overnight, because here we are, Tuesday, and the market's behaving as if a ceasefire actually just stopped with a world power and another country that's in control of a very important oil shipping route. So here we are, folks. A Tuesday morning that I thought was going to be acting like a Monday on the news we recently got. Markets are down, volatility is up, and a lot of our favorite individual equities, these tech AI plays, are uniquely down this morning. So we got to chit chat about all of that. You guys are calling me babyface. Oh, because I shaved? I was going for a 5 o'clock shadow. I might have gone a little bit close. I didn't think that was going to be a topic for discussion. But yeah, if any of you guys want my skincare routine, more than happy to sell it for you. For a mere, very reasonable charge of $69 a month, I do sell my skincare routine on Instagram. It's at Babyface Matt. Babyface Matt 420. You can sign up there, $69 a month. And the yen is failing us. I also, on that Instagram account, I talk about my skincare routine and the yen. Those are the two things I exclusively talk about. It's always what's going on with the yen and what's going on with my skincare routine. So I appreciate you guys pointing out that I look youthful. Actually, that's probably the first younger looking comment I've gotten ever since I've come back. Since I've come back, they're all like, especially the AMC community, because we posted a couple clips that went viral and they didn't like it so much. They're all like, oh my God, he's aged so horribly. And then you guys in here, thank you for defending me, came in and were like, dude, he just had a kid. I don't think he's sleeping that well. So we'll see. But yeah, feel free to check out that Instagram. And while you guys are checking that out, let me do my job and show you the current massacre that's going on in the market. The SPY is down 0.45%. The Nasdaq's down 1.3%. Volatility is up 4%. Nvidia, the world's biggest stock, is down 2%. The small cap sector actually holding on the best. And as you can kind of just see from the setup of 3 of the indices we check, I mean, I guess we could look at Bitcoin as well, actually kind of chill at 64. The tech sector is taking the biggest hit. And if you really want to know where there's a problem, look in the AI trade. SMH, the semiconductor ETF, is currently down 3.4% this morning. So if you want to know who the culprit is, well, in terms of equities, this is where you can look. And if you want some reasonable sounding argument of why things are down, will look no further. Iran-backed Houthis threaten coast along Red Sea checkpoint. The rebels have stepped up attacks near the Bab al-Mandeb Strait, I hope I said that right, and shut down operations at a strategic seaport in recent days. This is all obviously after the ceasefire between the U.S. and Iran. Ceasefire. I say that with quotes because it's the first time in maybe world history that what we all agreed was a ceasefire still involved missiles getting sent at each other, but that's besides the point. Over the weekend, the ceasefire did expire, so now we are back to sending missiles under a no ceasefire agreement. Trump takes hard line on Iran as Hormuz standoff drags on. Let me make sure the volume's at a good level for all of you.
We have a blockade. We control it with a blockade. And I like the idea of declaring it a territory.
Hormuz, the territory.
So where do we go from here? Let's speak
He
now
loves
to
just
Bloomberg's
needling
Abir
them.
Abu
He
Omar
loves
in
needling
Dubai. Abir, the truce has expired between the US and Iran. Both sides are talking about control of the strait. Where do we go next?
Good morning, Lizzie. Well, that truce that was reached in June back in Switzerland to end the fighting for 60 days was essentially rendered meaningless by Iran. President Trump also saying that he will not plan on extending it. But essentially, so many violations have occurred over the past 60 days or so that, again, from the perspective of Iranian officials, that MOU really means nothing. They have not discussed any of the concessions that were part of that ceasefire agreement, namely that nuclear component that is still pretty much President Trump's main goal.
I want to pause it there.
This.
That was kind of my main, I guess, thesis yesterday was Trump was saying the quiet part out loud on his Truth Social. He was saying, and just so you guys know, Iran will never, ever, 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 ever have a nuclear capabilities, power. And it was kind of like reading the room there. And I know, not a political strategist, not a political expert, but apparently pretty freaking good at guessing, because my guess was that had to be the major sticking point, and now obviously that's what's being reported. Trump is taking the quote-unquote hard line that, hey, we'll give you some relief economically in the strait if you just admit you're never going to have a nuclear power. And Iran is saying, hey, kick rocks and play.
But then the side conversations that are happening are between Iran and Oman. We've been reporting on those, of course, for the good part of the past 2 weeks. And we've been saying that according to both sides, those negotiations to find a mechanism, to find a pathway in the Strait of Hormuz to get a trickle of oil really are in the final stages. The last we know is that those continue to be in the final stages. But perhaps what oil markets are reacting to are some of the hostilities, Lizzie, that we've been seeing in the early hours of the morning. The UK Navy did report that an unidentified projectile had hit a vessel, that a casualty had occurred there. And just moments ago, our energy teams reporting that a fuel tanker trying to enter the Persian Gulf has made an erratic series of turns and finally stopped next to the Qushm Island in Iran, really showing that Iran is still very much trying to assert dominance over the Strait of Hormuz. Meanwhile,
I want to pause it there once again. Sorry for interrupting, but did you guys just hear that? Obviously, someone lost their life, so I don't want to make too light of it, but there was a UK vessel from the United Kingdom, and it was hit by an unidentified projectile. Like maybe it was a seagull. Like what? Like clearly, bullet, missile, rocket, some sort of military apparatus, and they're like, we don't just a fucking seagull came in real pissed off. He had Cheez-Its, he was eating lunch, and boom, right in the head. Very interesting how they report this. And I think it's almost as if they're trying to downplay like these legit acts of war, like actual legit serious conflict. And like, we're not really sure what that was. We're like, your guess is as good as mine. That's like, I find the reporting to be pretty strange this whole time.
of course, the United States maintains its naval blockade in the strait. And so you've got a situation where oil is not moving. Still, according to the United States, some oil barrels are moving from their side, but nowhere near where it was pre-war. So you've got that situation in the Strait of Hormuz. And of course, a lot of parallel fighting that is happening in the wider Middle East. That includes in Saudi Arabia, the Red Sea, Gaza, Hamas. That is flaring up yet again.
Well, let's
Yet
turn to Gaza
again.
now, because also President Trump's son-in-law and peace envoy, Jared Kushner, has been meeting with Netanyahu, the Israeli Prime Minister, as well as Hamas leaders. So Abir, what other progress are we seeing when it comes to acceleration towards a Gaza ceasefire? Is there possibility of meaningful progress at all?
Yeah, that's a good question, Lizzie. And we've been talking to a lot of analysts when it comes to this. So what we know is that Jared Kushner had met with Hamas leaders in Egypt before going to Israel and meeting with Netanyahu. Look, it's a situation of who blinks first at the moment. So Israel refuses to leave Gaza before Hamas disarms. And then you've got the Hamas situation where Hamas says that it won't disarm before Israeli troops withdraw. So it's really a situation of waiting and seeing what exactly will happen there. But just bear in mind that this is all happening at a time where elections in Israel are looming, and a lot of this conversation will be happening ahead of that election where the destiny of Prime Minister Netanyahu will be determined. And so we're waiting to see if there is any progress on that wider board of peace plan that President Trump had touted yesterday. He was saying to Fox News that he will endorse someone in the Israeli election. So a lot of unclarity about what exactly that means and if he will indeed endorse Prime Minister Netanyahu. We reported multiple times over the past 6 weeks that within the wider parameters of the war with Iran, of which, of course, Israel had taken part in the initial strikes, there were some tensions in that relationship between the United States and Israel, between President Trump and Prime Minister Netanyahu. So a lot of factors to the broader puzzle, if you were here. Another wait-and-see situation in the wider conflict in the Middle East.
So if you guys need me to summarize that, it's what they call in the biz a shit show is currently what's going on. So Oman, which is on the southern part of the strait, they're having continuous issues. Why Trump is threatening again to bomb Oman. So remember, the strait is there, Iran's on top, Oman's under it, and then there's actually an oil route under that as it connects to the UAE. Some U.S. officials see Oman as favoring Iran, while others say Trump is lashing out over failures to make a nuclear deal. So not trending in the right way, which is a very interesting thing to say for the exact same conflict that we were promised by the president we won like 2 months ago. Do you guys remember that? 2 months ago when we were like, he's like, yeah, dude, we already won. We're in the final stages. We crushed it. I mean, I've stopped like 10 wars now. Kind of interesting. I've never really read about or experienced ceasefires that have so many missiles, and I've never really experienced so many conflicts that we've actually already stated by the president one clearly that is still just going on. So lots of questions, lots of just craziness. It's just such political. Like, I think we're just so tired of it. I know I'm tired of it, and I know I'm preaching to the choir. I know you guys are probably tired of it. Like the fact that Gaza, Palestine still going on. Dude, Russia and Ukraine still going on. Folks, that is still going on right now to today. Imagine how bummed out they must feel that like just in the US, like we just don't give a shit about it anymore. That's still a very live, like active conflict that people are losing their lives every single day. And it's just fallen out of favor with US media. So just no one is tired of winning. Yeah, Mitch, dude, we're all just tired of winning right now. What is this? Disney-owned ABC files First Amendment lawsuit against the FCC. Who cares? Trump's Oman bomb threat, an attempt to get their attention, says former ambassador. That's how we should be doing things. Just threaten to bomb people when you need them to respond to your like late night text. I've actually tried that a lot in college. When I would like shoot out the you up, what's up, you up, like 2 a.m. text on a Friday, Saturday morning, something like that, and I wouldn't get a response. By like 4 or 5 in the morning, I was like, I'm gonna actually like rain missiles down on this campus. Didn't work for me then, and I don't think it's gonna work for Trump now. Side story, you guys might know that I went to Penn State. Did you guys see this story about Penn State? I feel like I went at the wrong time. I really could have been a good financial advisor to that cocaine ring that they were running. Like, picture me. There's all these frat bros. They're using the pledges to like pack those bags of coke. And apparently it was this huge, huge cocaine ring. If you guys didn't know the breaking story, Penn State, my alma mater, now it's a drug ring. I'm just thinking, had I gone to school slightly later, I could have been their financial advisor. I could have been the voice in the room saying, guys, let's take all this cash and put it in the S&P 500. Let's do some portfolio secured put sales to increase our gains. Like I could have really helped those guys. I could have set them up with some long-term investment strategies. We could have done some wheel strategies on the high flying. I could have helped them interject AI into their cocaine business. I could have been the guy saying, let's collect the data so we can identify the proper student meetups, basically parties and football games where we need to bring more, bring less. Like I think I could have helped bring that business to the next level. I think they could have used AI. I think they could have used some good financial advice. Just opportunity missed. Opportunity missed. Anyway, back to a different form of a fraternity. A cargo vessel was struck by a projectile while transitioning the strait, and that was the unknown projectile, maybe a seagull, we don't know. Trump ruled out extending the ceasefire in the near term, saying Tehran won't accept the terms he considers necessary to end their war. The former U.S. ambassador to Oman told CNBC a diplomatic solution to end the war was not ever really seriously on the table. It's so much just double talk here. Like Trump has literally said, they accept it privately, but they won't do it publicly. They're so duplicitous. And then they're saying, we haven't even talked to him. This whole thing is such a mess. It's just such a clusterfuck. It's so foobar, and yet we have to deal with it here in the markets. Tanker stops in Hormuz as Iran raises efforts to control the strait. So with all of this happening, and you can kind of see the breakdown, shout out to Bloomberg here, of like what happened and kind of where it was. Oman's on the south, Iran's on the north. Oil is obviously trending back up. Oil got a big spike. Things seem to calm down. This drop in oil, which I think is the best barometer for the tensions in the Middle East, this drop was the most recent round of talks from President Trump saying, yeah, no, like we're making actual progress. And then you can tell since really the month of August got underway, apparently we are not making much ground. So something we have to deal with. I'm the most shocked that this was not really in the market yesterday. I guess by the end of the day, it started to get priced in. But I mean, I spent the entire morning session talking with you guys of how it made no sense to me. I was like, hang on, this was like legit bad news. Why are we going up? And it turns out by the end of the day, and you could see here, we were holding on for a little bit flat, and then it kind of got cracked around 12:45, 1 p.m., and then we sold off in the close. And then obviously in the overnight session, it got decently worse. The SPY is currently down 0.5%. The Qs are down 1.3%, and volatility is up, being led to the downside because of really these AI plays. But this is just part of the issue. I saw some of you guys in chat bringing this up, and you guys are 100% right. It's not just US-Iran, but the measurable economic impact is being shown in sky-high yields, and it's not just in the U.S. Global bond yields hit a multi-decade high as governments pay the price for a U.S.-Iran stalemate. Like I said, not just in the U.S. Germany is set to sell 30-year bonds at the highest yield since 2011, the highest in 15 years. Folks, this is the real economic fallout, is what we're seeing really in sky-high yields, very low bonds, and we'll see where it's going to trend from here. But the current trend, I mean, it's horrible. Global bond slumps send long-term borrowing costs to the highest in decades. To explain this, here's TLT. These 20-year bonds are getting destroyed. Here's the weekly view. I mean, not that long ago in March of 2020, we were at 180. Getting down. Remember, bond prices and yields move inversely. As prices go down, yields go up. As yields go down, prices go up. So bond prices are plummeting, which is telling you that the 20-year yield is absolutely skyrocketing. Why this is bad is it means the cost to get capital is high. The interest rates are basically just going up. Let me show you the 10-year yield with this. I'm showing you this one because this is what people care about. This is the weekly view. Back in 2020, it was very, very low. And now we're not necessarily at a record high, but this trend is ripping. And then as we're kind of joking about, let's look at JPY USD so you guys can better understand this. Remember this little intervention that we had? The intervention when the Japanese government and the U.S. government started buying the yen, and all of a sudden that 3-day pop not holding, and this trend is not the trend you want to be seeing.
Then why now is this happening? These concerns have been around for a while. Is it the lack of other catalysts in markets, or how big of a role is the AI story playing here? We've got Alphabet kicking off its latest multi-billion-dollar Australian debt sale as well.
Lizzie, first of all, I like the misery going around the world idea. I think that's perfectly put. And I think it's actually a triple storm, or a perfect storm, if you will. One is the AI hyperscalers raising debt, including Alphabet coming to Australia. I mean, they've raised about $1.5 trillion worth of debt this year alone. That is the most since the pandemic. So I think that is weighing on sentiment. That is providing the immediate catalyst for the yields higher. And, you know, we are just at the start of the AI capex cycle, as you know, and I think that, you know, there's lots more to come from the hyperscalers, and therefore this spending is going to continue for the next 4 or 5 years, and I think that will have an impact on treasury yields, because, you know, if fund managers who can migrate between treasuries and investment grade debt are going to overweight investment grade debt, and therefore the spread between investment grade yields and treasuries is going to come narrow, because treasury yields are going to climb higher. And then you've got the perfect combination of, you know, deficits that are unchecked, inflation that has been uncontained for 5 years now. So if you put all those heady things into the cocktail mix, it's a pretty potent combination, and that's why we are seeing what we are seeing in the markets.
So what's the thing then that will put a ceiling on yields?
Well, I think that, you know, we saw, you know, the 10-year visit to 5% levels in 2023. We have come off those levels. We've never gone back, and we are still quite a bit far away from those levels. But I think that if we get to 5% on the 10-year, that'll push up the 30-year as well by sheer correlations. And that'll be an interesting entry point for many people who are thinking that, look, you know, these are yields that are too tempting. And that may clear the market, because that may see a short-term equilibrium there. So I think that, you know, we are some way off those levels, as I mentioned, but I think those levels are staring in the face of bond investors.
So maybe to say this in layman's terms, right now there is a absolutely gigantic demand. Let me go to the 10-year. There's a huge demand for capital. The US government, we run at a massive deficit. If you look at Europe and Japan, well, they're obviously going to be in their own complicated situations, but it all nets out to a lot amount of borrowing. So there's a demand from the US side, there's a demand from Europe, there's a demand from Japan. So on the global scale, there was already demand, and that's getting fueled more by obviously the conflict that we are currently seeing specifically in Iran with the US. So that's on the global scale. Then also on the global scale, but looking at equities, we're all seeing it. I mean, what was the number this year alone? I think the major tech players have tried to raise $220 billion in CapEx. They're all accelerating their CapEx to keep up with this AI demand. So that's more capital demand. Look at NVIDIA, Google, Tesla. Everyone's like exploding their CapEx. So you have that on just the AI side. Related to the AI side, you also have data centers. That's going to take more capital. And then we don't talk about it much here, but it is a very fair thing to bring up. Right now, there is an enormous reinvestment just in utilities back into the grid. So across the board, for many, many reasons, there's a huge demand for capital. When there's such a demand for capital, obviously what happens when you have increased demand and finite supply? Well, the cost of that underlying thing, and in this case, we're talking about money, goes up. So we haven't really like dove into the specifics here. And I know I focus on Iran. Sometimes we're talking about AI, but it all goes into one pot of why, for various reasons, capital, moolah, the greenbacks are in massive demand. When that demand keeps rising, well, the cost of that is going to go up. And that's exactly what we're seeing. Right now, yields are spiking, so these bond prices are getting very, very low. That's what happens when you have demand. And if it keeps going, it's only so far until something breaks, which is why there's such a conversation about what's going on here with the US dollar JPY with the yen, USD versus the yen, because it did recently hit a 40-year high. We try to intervene and help a little bit, but that seemed to be a 3-day affair, and we're already trending right back up. With respect to the very short term, when we're talking about yields and bond prices and inflation and monetary policy, that takes place over multiple quarters, if not multiple years. So for my day traders, for like what's going on today, there's nothing really scheduled. Obviously, there's some major news as it relates to Iran and individual companies that you should be aware of. This is part of the newsletter. If you're not signed up for the newsletter, sign up. But if you just need that little cheat sheet for earnings, Home Depot came out this morning. We could dive into that after market open. We're actually very rapidly running out of time. Klarna, Target, TJX, Lowe's, a lot of that stuff. And I have an interesting update on Anthropic and also on Meta that I want to circle back to, but we are running out of time as Piper is joining the show right for market open. Please, in a comment, let me know what you guys want up on the right side. Do you guys want up Micron and SanDisk again? They were the high flyers from yesterday. Do you want NVIDIA? Do you want Tesla? What do you guys want? Please comment below somewhere. Help me out. Tell me what equities you want on the screen. I'm more than happy to put up whatever.
Dingity ding ding ding. The world's largest casino is now open. Best of luck to all. Play responsibly, and if not, have fun.
All right. As the market is opening, I do want to let you know there are some upside gap fills. So we now have a downside gap fill to 701.59 on the Qs, the ETF tracking the NASDAQ. And then there's an upside gap fill to yesterday's low at 729 and some change. So we have both an up and a downside gap fill within proximity on QQQ. If you look at the SPY, similar situation. There's a downside gap fill to 758. And Piper, you are very much in the way. You're being a little bit rude. This is the start of the show. Here, just hang out with me. Just chill. Just chill. Just chill. Stop it. Stop it. Stop it. Just stop it. All right, just chill right there. Where is this? Hang on. We're running out of hands. Hey, just calm down. Come on, count to 10. She's just lashing out. She doesn't like when the market falls like this. She is a permeable, so she gets a little antsy when things go a bit red. It's just not her favorite way of engaging with the market. Piper, stop this. Anyway, 758 downside gap fill on SPY, 772 upside gap fill. You know, We're starting to see a little bit of a bid. If you ask me, we're in a really strange zone where it doesn't make the most sense that this was such a delayed sell-off, and then the size of the sell-off in the short term is a bit dramatic, and like now we're just playing this double gap situation. We broke this upward sloping trend line on SPX. If you want to know the gaps on SPX, downside gap fill 7610, upside gap fill 7745. So 2 gaps to watch there. So gaps everywhere. Everywhere you look, gap. That's just the situation we are currently in. NVIDIA not doing much. SanDisk catching a bid, but still down by 4%. Micron catching a bid, but still down by 3.8. The actual only green thing I'm seeing on my watch list is Netflix. Piper, okay. This is a professional show for serious people. You know that. I feel like she just sometimes doesn't respect everything that I do. Stop it. Just chill. Just relax. Take a chill pill. It's okay. So where are we out of the gate? A little 2-minute pop, a little bit of getting hit. Netflix was green. Someone said Broadcom. Sam, what's going on with Broadcom? Down by 2.2%. I actually might have to cut my Broadcom position. I have time. I have a lot of time on Broadcom. I have a lot of time on Netflix. Maybe I just need to wait and see how today actually shakes out with these gap fills. Are you calm now? She's just chilling now at this point. She's just taking a little bit of a chill pill. What is under me? Oh, the framing isn't exactly where. Hey, do you want to go on your bed? Come on. I think Piper's mainly here to remind us all, when in doubt, zoom out. Dude, she comes right back to in front of the screen. She like is blocking half the computer in front. What are you doing? Why do you keep coming back to right there? What's going on? Talk to us. Talk to me. Talk to the crowd. Say hi to all your fans. What is happening right now? Are you really that perturbed about the market open? It's not that bad. Trump already promised us that we've won the war like 18 times. Does this channel trade options? Yeah, I'm actually in quite a few options right now. NFLX, AVGO, LRCX, and MU are my main live option plays, which are not looking good at the moment. And actually, we're kind of getting hit. But lots of options trading, lots of futures trading is the main two things. Lots of trading the NASDAQ on the futures market, and a lot of trading these AI names or somewhat related to AI names in the world of options. Piper, come over here. Come on. Do you want the pen? Maybe that's what she wants this whole time. This thing that I just feverishly click. Over here. It's on your bed. Uh-oh, someone else is going to get it. Come here. Someone else is going to get your toy. It's right here. Come here. What are you doing? You really got to get out of there. I feel like she's just going to accidentally hit a cord or unplug it, which she has done in the past. Just chill. Just relax, dude. Antsy. She's got True Social post. Thank you. All right. What is Trump saying? We could have paid $100,000 for this. There are no talks or conversations going on or scheduled with the Islamic Republic of Iran. The naval blockade remains in full force and effect. The Hormuz Strait is open and operating. All water mines have been removed or detonated. Thank you for your attention to this matter, President Donald J. Trump. So the fact that there's no talks going on, the market is like, fuck yeah, dude. The market loves it when we're not talking with the country that we are currently in warfare with. I get it. I get why people are coming in and buying right now. It makes sense to me. What do we have going on here? All right, little look at the real-time order flow. Just seeing what's going on. Just hit some aggressive selling. Someone is trying to get out at 720. Maybe it can take out 750. Here, let me switch this up to the 5-minute. Let's see if we can get the larger picture. So this opening minute, a lot of aggressive selling. Remember all the purple, whether it's the square, the rectangle, the diamond, the circle, that's all aggressive selling. People traversing the bid and the ask and hitting it on the bid. So the first 5-ish minutes, aggressive selling that, to be fair, is getting absorbed. If we somehow trend up from this, even though there's that much selling going on, aggressive selling going on, that kind of gives you an indication of the strength of the buyers currently in the market if they're more than happy to absorb this. Kind of crazy, actually. Interesting breakout level. Well, did we already hit the pre-market low? Yeah. Did buyers just come in at the pre-market? Yeah, they did. Okay, so the overnight session low was 678. We took that out in the opening minute, basically, and decent pop-up from there. I mean, you had to be able to withstand about 40, 50 points of drawdown, but it's trying to break out on the 1 minute. 3 minutes, all the momentum is bearish. Let me show you this. Right here, here's on the screen right now is the ES contract. That's for the S&P 500 futures contract. 1 minute's bearish, 5 minutes bearish, 10 minutes bearish, 30 minutes bearish. Looking at the NASDAQ, 1 minute is testing, 5 minute got rejected, 10 minute kind of got rejected, and 30 minute clearly bearish. Here's a look at flow thus far on the day. Not so good. A little bit of a hit just to the downside. Looking at the Mag 7, actually oddly flat given how red it is. And then looking at the NASDAQ, actually kind of trending up. The NASDAQ is trending up right now. And it is put selling. So it's not bullishness. It's not like people are coming in and YOLOing calls, but it does look like people are selling puts. So maybe they're selling to open. If I had to guess, and we won't know this to the end of the day, I would assume it's people who had puts locking in profits. I bet it's selling to close, but once again, that's just a guess on mine. A guess on my side. Okay. If you guys haven't been here before, or if you need a reminder, I do like to wait for the market to open. I find that my best trades are when I'm not doing it right away and have some sort of structure to play off of. So on that note, let me share some of these other, what is this? S&P 500 falls hurt by rising treasury yields and oil prices. Yeah, not so good. Other just individual news that I deem to be important. Anthropic tells investors annualized revenue run rate climbed to $65 billion in July. That is a big, big number.
Let's get into all the numbers, right? These are data points
This
presented
is for
in documents seen
Anthropic,
by Bloomberg
Claude.
and shown to prospective investors, right? In what is an interesting period of the year. There are several of them. Just take us through the numbers.
Yeah, so we have this revenue number, which is many times what the company had reported just a year earlier, which indicates that what it is doing is trying to sell its services, especially to companies, but also consumers are buying its services as well for its chatbot Claude is working. I mean, it's up about at least 14-fold from last time. It also is clear that the company had their annualized revenue or run rate crossed $47 billion in May.
That's so crazy.
From what we know, OpenAI has
to
an
put into
annual run
context
rate
of
over
how
$40
big this
billion.
company is, that's
it's important
incredible.
to remember that companies calculate things differently.
I point out that there's a number of AI stocks on the move to the upside this morning. The other data point was interesting is positive adjusted operating income, which in Anthropic's case, I guess, is making everyone feel good that losses won't be infinite and forever. But the comparison to OpenAI on ARR is really interesting because we put this in the context of two potential IPOs.
NASDAQ is still
if not
climbing.
this year, then maybe next year as well. What's the kind of reporting on the timeline for that?
Remember, upside gap fill on QQQ to 72927. We're trading at 721. Also downside gap fill.
These two reports that we've done recently, this most recent one on Anthropic, and then the other recent one we had on OpenAI, and how their revenue is increasing. If we look at them individually and don't try to compare them to each other, because as I said, with ARR at least, they're calculating them in different ways. So it's certainly not an apples to apples comparison. It looks like each company is showing investors and potential investors better information than it could have just a month or two ago. And so that can be a really positive sign for an IPO.
What about the technology side? Where do we stand with Anthropic and OpenAI and sort of the cadence of them releasing the latest frontier models and where their business focuses are?
Yeah, it's been kind of interesting to watch that unfold over the last 6 months or so as these companies move closer to a potential IPO.
Here's Bookmap above my head.
Seeing them sort of refocus or focus more intently on certain aspects of the business. I think with OpenAI, we're still seeing a cadence of releases, but we're seeing less of an array of things, which is interesting, and it'll be even, I think, more clear as we go forward more this year. But we're also going to see the company continue to focus on things that it thinks are important, both on the consumer and the enterprise side, because those are both really big businesses for it. With Anthropic, I bet we can expect to see a lot more on the like coding side, probably science side as well. We may see that out of both companies, both of those two things. But I think we're going to see a lot of that sort of stuff happening, this sort of coding, perhaps science, and maybe some other sort of work-related applications that we haven't
We're
seen too
waking
much
up.
of yet.
Tesla's
for
going,
these chatbots
Microsoft is
that they are
going.
hoping to sell to people.
Little overshoot, little double bottom. So gives you an idea of Anthropic, keeping you guys in the loop because they are expected to IPO sooner rather than later. One company that's currently under pressure is Meta. Meta faces astronomical consequences as legal fight reaches critical moment in California. Not good. Meta stares down $1 trillion threat as landmark social media trial begins.
So a federal trial, a jury trial, Balash. What is the court tasked with examining and ultimately answering here?
Well, it boils down to one thing, Vonnie, whether these algorithms were designed to get people, get children hooked on social media, whether they were designed to start some compulsive behavior. So this is different from the previous debates, which mostly looked at content. And ultimately, the courts found that that content was protected. So there was no recourse for the state over the content on these social media platforms. These are now coming at it from a consumer protection angle and trying to find whether the design of these algorithms have violated those state statutes on consumer protections. We're talking about the endless scroll. We're talking about the recommendations. They're trying to find whether there was anything untoward the way those were designed. There's a secondary question about data protection, which is a federal statute, whether these platforms, whether Meta handled minors' data without the consent of their parents, whether that ran afoul of some federal laws. So those are the two main things the court is going to be looking at in this one.
It's going to be an incredible trial to follow and arguments that will, I'm sure, be just extraordinary. Now, we talk about the penalty being as much as potentially $1.4 trillion, but what would likely happen to Meta if it were to be found liable or guilty or whatever the term would be here?
Well, the 1.4 trillion is obviously an astronomical figure that comes right up to the market value of the company. Now, legal analysts that we talk to tell us that that is probably mostly for shock value, to get people's attention and to show the symbolic nature of this trial. But it is based on some calculation of the number of people potentially harmed and putting a dollar value on each of them. But if they do have to, if they are found liable in this trial, then they, at the very least, will have to change the way they operate. They will have to change the algorithms, and that has wide-ranging consequences for the entire industry. Where the actual penalty might end up, that's very early to speculate, but certainly that 1.4 trillion does grab people's attention.
And just, Balazs, how long are we expecting this court case to last? Roughly?
Failed breakout.
At least a few weeks. There will be testimony. There will be deliberations. We will hear from several states. We will hear from Meta, of course. So this will be a relatively lengthy trial. But as you said, it's going to be fascinating to follow along.
So Meta, as he kind of alluded to right there at the end, it's going to take a while, but this is a very, very serious court case where, of course, they're not going to suspend $1 trillion in fines, but not looking so good. Not looking so good, especially when the question is, did they intentionally create algorithms to be addictive? Yeah, that's what every social media company does. So interesting to point out, interesting to note. And what's interesting now is we had a failed breakout on the Qs at this initial high right here. Not so good at 9:40, 10 minutes into it. Maybe it's a double bottom low, but kind of watching this zone on the top. And then, of course, watching the intraday low here. If you look on the SPY, it was just a double top rejection, effectively. It overshot it by a little bit. And then let's watch this low. So let's see what's happening here. These are the zones I watch. Obviously, this early in the day, there's just not much data to go off of. Heck, we only have 15 minutes worth of data. So we're going to see. We're going to see which way does this actually want to go today. And is there any scalpable opportunities?
Order filled.
What did I just do? Do not like that. Not a fan. I see what it's looking at, but I would have preferred a little bit. Come on, Phil. Get the fill. Shit.
Order fill.
Got the fill. All right, so that was actually my second trade of the day. I did have a pre-market trade. I was testing things out, and I saw a setup. So, Matt, did you break a rule? Yeah, I technically broke a rule. I didn't wait, but whatever. 2 for 2, and I kept my risk in control. I was trading with trend, yada, yada, yada. So technically 2 for 2 on the day. One of these was very early in the day. Can I even oh, right here. You could see 813 basically saw this double bottom, fake out, breakout, starts to plummet. I see a recent low, see a little bit of life, get a horrible fill, knock it anyway. And then obviously went in my favor before very, very dropping, very clearly dropping, I should say. Anyway, that trade was at 8. So that was my first trade of the day. And then my second trade was the one just executed on this breakdown of the low. Could be an overshoot. We had an overshoot already. This could be a second overshoot, but obviously maybe I could see it better here. I'll zoom in. I'll zoom out a little bit. Right here, it punctured it, popped up. I said I didn't like it because I liked the short better at 79. This was very delayed to get into the tune of 13 points, but I liked it a little bit better on this breakdown at like 946. But anyway, whatever. 200 is 200. And I feel like I just need to be a lot more calm and maybe don't have such lofty expectations, anywhere from whatever, 200 to 500 bucks a day. If there's enough setups, hey, trade more. If there's not many setups, be happy with 200. I think ever since coming back from paternity leave, one of my biggest issues is I just need to be okay with not making that much. Like this idea, and I don't know if you guys feel this pressure, but not only from streaming, I think I would be this way, honestly, without streaming. I feel like when I go green, I just have this pressure to always go more. Like, hey, 200 was easy, go for 400. Oh, 400 was easy. Why would you not go for 500? I feel like I get into this cycle where, like, if I'm doing well and making money, I get irrationally wrapped up in this idea of you have to make hay while the sun shines. So if the market is easy and you're making money, try to go for more. And the mindset, which is kind of right, but more so really wrong, and I'll explain this, is the mindset is, okay, if the market is easy money right now, you need to make money to pay off all those times that the market is difficult and you're not making money. But where it falls apart is that's fine on the surface level, but where this thought process falls apart is like you're just overdoing it. And all of a sudden you start taking trades that aren't the good setups. You're trading in a time period that maybe that's not where your system performs. And like it falls apart. So as much as that sounds reasonable on the surface level, it's not. And I feel like these times where I have periods of success, I end up pushing it too far. And then that causes me to have periods of failure. And then I get angry at myself. And then I start doing things that are not the system, too much size, and I break all my rules. And it's as far away from being a disciplined trader as you could possibly be. So I don't know what trader you're going to get from me today. Granted, I do have on my lucky Buffalo shirt, so maybe we'll get lucky. But man, this is really heading right back down. Even this, I'm not the biggest fan of it. It was a higher quality trade up here at the break of 80. You can't see it that much on the 1-minute chart, but that's a lot of wicking right back up. Why is AVGO selling off? Have you seen the entire market? Everything is red except for apparently Netflix. What do you mean? It's just, this is a market sell-off, dude. You could probably see it better here. I mean, why ask about individual companies when the whole tech sector is red? Look at semiconductors, all red. Technology, all red. There's green in healthcare. There's green in energy, consumer defensive. But if you're a person looking at the tech sector, which is probably most people's interest, right here, technology, not software, but semiconductors and computer hardware getting destroyed, and communication and electronic components. Like there's a clear clustering of red and there's a clear clustering of green. Healthcare is green, energy, consumer defensive. But for AVGO, like you're naming one semiconductor. Look at all semiconductors. They're all red. Hang on. This is interesting. We're right in support. Are we going to bounce right out of here? We have a higher low in a region of support. What is the options flow looking like? NASDAQ was up, kind of trending down slightly. Mag 7 did pop until about 941 coming down. And then the S&P 500 got hit, gone flat, and now trending back down. 1 minute, try to go bullish, knocked bearish. 5 minute, same thing. 10 minute, same thing. 30 minute, clearly bearish. NASDAQ, try to go bullish, got knocked. Same thing on the 5, same thing on the 10, 30 minute, clearly bearish. The gap on the daily to the upside, Matt, it's there on SPX. There's two gaps. What are you talking about? There's a gap to 7744, and there's a gap down to 7610. There's a gap to the upside. There's a gap to the downside. The same thing is true in the NASDAQ. There's a gap to the upside. There's a gap to the downside. So you're right in to say there is a gap, but the way you're saying it, I want to be clear that there's a gap that favors the bulls and there's a gap that favors the bears. There are two gaps actively in play right now. Did you ever get the Apex payout? No, I'm still awaiting communication with the company. I've had no official communication on the state of the payout beyond the fact of I need to speak with them. When I get that way, I go from making 200 to 1,000 before I stop and blow away. Yeah, I noticed that my best trading periods, oddly enough, with Apex, a lot of that was make the $1,000 and step away. I noticed that it was a lot of like high end or higher end consistency where it was make a grand, step away, make a grand, step away, never really trying to like swing for the fences, which I think sometimes these prop firms that have uncapped consistency, maybe it's a little bit tricky because you're like, well, it's uncapped. If it's a good day, keep going, but maybe it doesn't set you right. You know, at least me, I can't speak for you because this is psychology. This isn't really market mechanics. The psychology of it, like I just sit there and I'm like, might as well try to make a little bit more. And it just doesn't really end that well. Doesn't really end that well. We are below RTH VWAP, which is just below 700. And then 800 is session VWAP. So we're below both VWAPs, and momentum, price momentum is red across all major intraday trading time periods. 1 minute, 5 minute, 1 minute, 5 minute, 10 minute, 30 minute bearish, 1 minute, 5 minute, 10 minute bearish. There are gaps. I mean, this could reverse on a moment's notice, but right now I'm not seeing the strongest flow. And if we zoom in, there's, depending on how today plays out, you could see to 4 p.m. this could be a dip. Not a huge dip on top of where we are now, but there's basically negative gamma up to 7740, and there could be negative gamma all the way down to like 7665, 70. So like it's a bit weird today, but I am kind of paying attention to this negative gamma node. Is there a chance that we can come up through it? Or is it going to stall out and then later on today when this gamma ramps up? Remember, gamma picks up exponentially into close. As this gamma node in the bottom grows, is there going to be pressure to the downside? There is a bit of support right at 700 flat, which is effectively where we are right now. Here are my key levels on the day. I forgot to show this to you guys, but with SPX, we opened up at 710. Then there's a key psychological level at 700, and actually that's building out as a key gamma level. This was not here at first, but you can see between 700 and 790 we are getting a pocket of support getting built underneath. Now, will that support hold? I mean, your guess is as good as mine, but I am letting you know between 700 and 85, this is a small region of support. It's a small positive gamma node, and then if that cracks, I mean, we'll see how far this can actually go. Netflix is looking good, though. Have you better results with structure based on stops or ATR based? I don't get the question. Have you better results with structure based stops or ATR? So you're, it depends. I have systems that you both. I can't definitively say one is better because some of my systems work better with just a hard coded stop, like a specific number. Some of them are recent swings and some of them are ATR. So I'm not here to preach that one is better than the other. I think one is better than the other depending on your system. Why is it better to trade your prop account rather than your own account? Well, there's nuances. It's not like it's all perfectly better, but the advantages of a prop account are less risk to you as a trader and more leverage. So basically, if you have a system that can survive the nuanced rules of prop trading, the potential return on investment is considerably higher. Everything is selling off. It's nothing. It will go up soon. Again, well, what do you mean by soon? Of course it will go up, but are you saying soon as in today, this week, this month? It's really easy to say things like the market will go up, the market will go down. Both of those statements are true. The difficult part is the timing of it. So when people are perma bulls or perma bears, eventually there's going to be a day or a, hang on, I do like this reversal, a fake out breakdown. There's going to be either a red day or a green day that you can point to and say, yeah, I was right. That's just always inherently true. It's not like we only go up or we only go down. In the super long term, it is like you get paid to be a perma bull if you have enough time. Like if you're saying a multi-year time frame, yeah, it pays to be a perma bull without a doubt. I think that's you're not able to dispute that for the overall market. But if you're talking about a short or medium time frame, I don't think that those types of predictions really matter unless you're like actually giving us the time frame with the prediction of, oh, it will go up in the next week. Oh, it will go up in the next month. It's so time. Are you talking about the next minute? Are you talking about the next week? Like, what's the time frame associated with it? I think that's incredibly important. Interesting situation, deviation between the S&P 500 and the NASDAQ. The NASDAQ is clearly weaker. The SPY put in a higher low, trying to bounce for the third time off the support area, just in the realm of the lower 768 zone. The Qs overshot it. The Qs overshot it. Uh-oh, what are they doing today? What are they doing today? Is this actually going to try to get going? We overshot this region of support. Is it a little bit of a fake out? The way we had this fake out breakout already this morning, are we having a fake out breakdown? It did break this trend line, but now it's fighting right back up to it. Very interesting if it can recover 680. Very interesting if it can recover 700. That would favor the bulls, pushing it back. Let's just call it 750 for now, back up to this region. But for now, are we breaking down? Is this support going to turn into resistance and we fail? Or is this just an overshoot, a dirty bearish trick, and then all of a sudden we pop right back out? Time will tell. I have no unique prediction, but I'm just, I guess, waiting here to see if there's a viable play off of it, a positive EV play that we can see off this zone. I mean, it's looking like a brutal fake out right there. A quick little 1 minute bar low, we take out the high and it pops anyway. Seems like it could have been a brutal trap. There was a lot of buyers at 600. We never actually got to 600. The intraday low is 604, but we might be returning there now. We might be failing in this zone. Remember, when we come to these important battle zones, that's what they are. They're a battle zone. You shouldn't be predicting who wins the battle. It's just a battle, and our job should be to sit here patiently, especially as day traders, and just wait to see. And remember, as day traders, especially as retail day traders, we're not influencing the market. That's just not what we have the capability of doing. We just don't trade enough size unless we have like secret billionaires in here. Our job is to wait for the proper setups and just ride with the big fish and get our money and then move on with our lives. So all I'm telling you is big players are fighting this out right now, and we're going to wait to see who actually wins it. Netflix is climbing, trending down. A little wick right there. I'm actually surprised I did not go short on that. Very surprised. Why? Maybe it just didn't drop enough? What are we looking at? It wicked out of the zone again. I guess just not enough. Maybe it's looking for something closer to 610. I thought this wick down would have been enough to get me in. But apparently not. Apparently not yet. We'll see. It's seemingly pressing. Broke the trend line, came back up in the region of support. All right, let's see if we could check out the order flow with this one. Ran into some buyers that just got absorbed right there in the last minute. It could be the 10 a.m. Maybe that was the craziness of this bar, just the fact that it was exactly 10 a.m. We're wicking low, 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 but we were also wicking high, 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 high. Which way does this actually want to break? Which way does this actually want to break? Little pop. These people got trapped. These people got trapped. We just have to have that patience. Little 10 a.m. jocking. Might be the 10 a.m. reversal. I'm not here at all to pitch that it happens every single day. Ooh, someone just smacked it at this little dash line, the value area. But where's the point of control? 700. Interesting. Smacked right there. We're coming up to RTH VWAP 84, 85, which is roughly in line with this. What are we doing? This orange dash line on your screen is the RTH VWAP. And then we have the blue dash line, which is 50% of the current days from 9:30 open, the current day's range. Hard pop up there. And we're at 1 VWAP. Where's the next VWAP? It's quite a bit higher. It's 787, so it's 100 points above where we are. There's two VWAPs I mainly pay attention to. RTH VWAP, the start at 9:30, and then session VWAP, which starts at 6 p.m. ET the night before. So those are the two main VWAPs I personally pay attention to. This is a nice climb to 700. All right, checking this out. 1 minute's trying to get going. It's trying to get back out of this region. Little fake out breakout at breakdown, excuse me, at 9:55. Trying to recover. Can this be the start up to 750, or is it just going to get smashed? How is the S&P 500 looking? S&P 500 is sideways. Tesla, Netflix is climbing. I like that. Technology still pretty red. Upside gap fill to 7745. That's a very interesting target if the bulls can actually get going here. This SPX for multiple times bounce off of 700. Bounce, 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 bounce. Can it get back above this node, and can it take out this region here? Can it actually get going? We're like right teetering on, does it actually want to go? Or is it just going to get, this is a big decision point. We ran into the 50 EMA, the 100 EMA on NQ. We ran into what? The 10 on SPX, but just kind of watching the structure here. Who's it going to be? Who's going to win? Remember, I deeply believe if you're trying to predict the winner, you are doing something that is not going to make you a profitable trader. I think it's far better to react, wait for those setups, rather than just guessing on who's going to be the winner in it. And right now, all I can tell you is we, for 3 times, hit this region of resistance. For 4 times, hit this region of support on SPX. The NASDAQ is weaker, maybe failing in here. Maybe failing. What are we doing there, Tonto? What are we doing? Slow to react to that. Oh, yeah, that got smacked pretty good. So I guess we failed at VWAP. RTHV up pretty clearly. Right back to this region. Right back. Wick. Breakdown at 2-1. I'm not chasing it to the sell side yet. I'd rather wait for a failed pump. Kind of liked it better 30, 40 points above, but that was a clear failure trying to get out and clear rejection on the SPX. So looking at that pump at 1003 on the S&P 500, just got rejected in a region of resistance. Looking at the NASDAQ, basically failed on the breakout, but it's catching a bit at the bottom. So as the NASDAQ is battling it out in a region of support, you have the SPY getting rejected in a region of resistance. So just have to wait for something to align, something to play off. Cue the 10 a.m. reversal. We might, maybe it's a little delayed, but we might see it. Hey, Matt, when I click the link, it doesn't work. Site can't be reached. What site? The breaking link for TPT. I don't know what to tell you. I just clicked it and it works for me. Can you just try again? I just clicked it and it opened. Could be a higher low there. Is it coming back up for another test? 675 just got rejected and smashed. And smashed. I'm interested in the reversal because I want my swing plays to do well, but the momentum, it's really tough to argue with this momentum. The momentum, SPY doesn't know what it wants to do. Mag 7 was down, trying to recover a little bit. The NASDAQ popped going flat. We have negative gamma both above and below, all the way up to 7740. The upside gap fill all the way down to 7670. One minute got rejected twice there. Five minute, 10 minute. ES, 1 minute's trying to go. 5 minute keeps wicking. 10 minute keeps wicking. So similar to yesterday, it's a tale of two different stories here. We're kind of coming back into this, the bottom of the region here where we had the fake out earlier today. Our buyers, I mean, it's an area of support. Are they going to crack it or not? Are they going to crack it or not? They're trying to crack it. If you look at the book map above my head, there are buyers lining up at 620. And the low is 605-ish. Which is also some buyers just try to step in a little bit. Is it all just a fake out? I feel like I missed two trades. I like that trade. I like that. I feel like I did miss two trades. Maybe I did it. Maybe I'm just being disciplined. Who really knows? All right, what I kind of want to see is a pop that fails. I don't want to chase it to the downside. We spoke about it yesterday, that chasing, especially here at 600, sometimes it's going to work, but eventually variance is going to hit you and you're going to get blown out. Chasing it in either direction, chasing it to the upside, chasing it to the downside is extraordinarily dangerous, especially if you're doing it with size, but also anything you do with size is going to be dangerous. I find that the people who are more successful in this game, they wait for the retest failure. So instead of chasing it, they wait for some sort of pop that fails and they play it rather than just saying, okay, I'm going to get in now and it has to keep going from this moment. Just because when you do it, obviously your reasonable risk is just farther away. You're chasing it at 620. Your risk is 706. And in this case, yeah, you're up currently by 25 points. But what happens if it bounced to 660? You don't really have a good reason to get out, but you're underwater. when, yes, sometimes if you don't chase, you're going to miss moves that just go and they go without you. It happens. It's part of the game. You just have to accept it. That is life. I'm sorry, but you just got to accept it. I got to accept it. You got to accept it. You're going to, like, I mean, this idea of like missing trades and FOMO, I mean, let's reverse engineer that. I mean, honestly, you could be like, why didn't I go bullish here or bullish here and then bearish there and then bearish there and then bullish and then bullish and then bearish and then bullish and bullish and bullish and bullish and then bearish, 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 and then a quick little break to go bullish. Like this game of FOMO, when you like really think about what you're saying and you're like, oh, I missed that trade. It's like, well, you're actually missing an infinite amount of trades, because if you were on the right side of each tick, you'd be a like gazillionaire. So this idea of like, you're just cherry picking the times that, like, I mean, we all wish we went short at 942. We all wish we went long at 956. We all wish we went short at 1004. Like this idea of like retroactively cherry picking, wishing you did things, it's dangerous. I think it really can mess with your mentality and cause you to do things that you know you shouldn't be doing. So if you miss a trade, whatever, it's water under the bridge, cry about it later, but do your best. And I know this is far easier said than done, but do your best to not let it mess with your mentality of like what's going on. You're waiting for your setups, and just because something did happen that could have made you a lot of money, that doesn't mean you could have taken it, because if it's not your setup, it's not your setup. And even if you have a setup and you miss it, whatever, well, one way to not miss it is to automate it. But if you want to be a manual trader and you ended up missing it, okay, it happens. Like you just gotta go on. It is far better to miss a trade, whether winning or losing, than it is to take a trade you shouldn't have taken, regardless of the result of either. You don't want to get caught up in like this idea of resulting, of like, oh, I broke my system, but I won anyway, so it's not that bad. No, you broke your system. And if you keep breaking your system, if you have a good system, you're going to eventually blow out. That's the math of it. Will timeframes help reduce FOMO? I mean, FOMO is an individual battle. Like, what works for me might not work for you. What might work for us might not work for someone else. FOMO is like an internal thing. It has nothing to do with the market. Remember, the market's emotionless. It's cold. There's literally no emotions going on. Either numbers are going up or numbers are going down. It's a measurement of bullish or bearish aggression. FOMO has to do with the individual trader. Of, do they feel like they're missing out? And that's up to you. I mean, like I said, what I do and what works for me, sometimes it doesn't even always continually work for me. And then there's other times that it works well, and that doesn't mean it's going to work for you. I was looking at the QQQ last night, looking at the put that I closed yesterday, crying myself to sleep. But even that, how do you know that was like, so if we gapped up today, would you also be like, you made a decision based on the information you had at that moment in time. And now you're having an emotional response to it later based on new information that was literally impossible for you to have in real time. So to be here having a positive or negative emotional reaction later, it doesn't make sense. And now I'm not preaching you guys saying like, oh my God, like I never do that. Of course we all do that. Of course we all play the woulda, coulda, shoulda game about this type of shit. That is not like, that's just called being a human. It happens. Trust me. But you have to like try to logically reason yourself out of that thought process, because the opposite could have happened. Last night, it could have been announced that we came to an official agreement with Iran and we could have gapped up by 5% and your puts would have been destroyed. And once again, this is all information that came after your decision. So all you can do is reasonably hold yourself accountable to what is your system, what is your trading plan. If you did what your plan said, regardless of how it plays out, in my book, that's a win. You did what your trade told you to do, what your system told you to do. But to try to hold yourself to the result of it, as in, oh, if I held more, I could have made more money. If I held less, I could have made more money. Like the whole woulda, coulda, shoulda thing, it's going to eat you alive. It's going to eat you alive. The way I look at it, what you can reasonably do, hang on, I'm just zooming in on some of my charts. What you can reasonably do per trade is ask yourself, did you stick to your plan? If you did, that's a win. If you didn't, that's not a win. And you got to write them down. You got to do what you do and try to get as many good trades. And we're defining a good trade as in, did you stick to your system? Did you stick to your plan? Not winning or losing. You're going to notice that all of a sudden, if that count, if that consistency, if that streak starts to improve, so is your net P&L. Can you give me tips on TPT? I don't have any trouble passing the test when I get funded, having trouble with intraday drawdown. That could be system specific, of just you're giving it too much run. I mean, I don't like intraday drawdown. I think it's a little bit of bullshit. Personally, I hate that rule. I think if your system calls for you just to be safe and set it to break even, that punishes you with intraday drawdown. But that's not really a TPT specific issue. You see that across the board, and that's because, remember, with eval accounts, they're not necessarily the most stoked on paying people out. That's not necessarily their goal there. I kind of want to see it get back up into this 20-point region. Remember, actually, before when I was saying just about chasing, okay, so if you chase this breakdown at 604, if you were a scalp trader and your target was, I guess, below the 35-ish points, you would be good because you technically locked it in. But if you're going for the actual puke, the actual vomit, look at, if you just waited and waited for a retest, you could have gotten a better fill. And then even from there, you're even safer because not only are you getting a better fill, but you can wait for confirmation that this trend is still actually trending down. So as I get it, if I show you this, oh man, that looks exciting. You can chase it. And what if it completely vomits and goes all the way down? Yeah, maybe. But also, what if there's just a big bounce that fails? And all of a sudden, or what if there's a big bounce that doesn't fail and it just rips you apart? That's also 100% possible. So you got to be careful with this chasing mantra. Or it's not really a mantra. It's just like a knee-jerk reaction that I feel like a lot of traders have. And like when I say a lot, I include myself. I am not saying that I'm somehow better than this to possibly avoid it. No, folks, a lot of the times I'm right there too, doing the degenerate shit that I probably shouldn't be doing. And I find that talking out loud and talking with you guys a lot of the times helps me from doing the exact dumb shit I know I shouldn't be doing. Okay. Bouncing at 600. Let's zoom in. Well, first let's check the SPY. The SPY is bouncing off its zone a little. It is still getting lower highs. So it's trending down, lower highs, lower lows. But finding an overshoot support, a failed breakdown, is by definition bullish. By the way, Netflix climbing up, Tesla was climbing up, not doing much. Lam Research getting hit, Broadcom getting hit, SanDisk getting hit, Micron getting hit. Bitcoin's catching a bit, actually. All right, where are we at? A little failed reversal. What is this one? 51. 51, and then RTH VWAP is 67. Interesting. Do I want to play that? So I'm looking at 50 and I'm looking at 70. I'm looking at 50 and I'm looking at 70. I only traded the 25Ks at TPT due to the trailing drawdown. I find targeting about 25 to 30 points per day. Only 1 to 2 MNQ is the way to play it. Yeah, I mean, an easy solution to that is if variance is knocking you out, you just have to play smaller. A lot of trading issues are solved by trading smaller. To be completely honest, I don't care if you're talking about futures and prop, real futures, crypto, options, equities, Forex, I don't care what, trading Pokemon cards. Most active trading issues, not all, but most are going to be solved or really, really reduced by just sizing things down. Like if you're sitting there and you're bashing your head against the wall and you're like, dude, I just don't know what to do. I'm trying to figure this out. I promise you, one reasonable way to try to solve the problem, and it's going to solve most, not all, I can't guarantee that, is going to be just size down. Whatever you're doing, you could probably safely assume you're trading at least double the size you should be. Now, if you're watching this and you're a hyper monk-like disciplined trader, maybe you're the exception to the case. But the general rule of thumb is most traders are not the best at trading, like in terms of risk management. Like their trading is suffering due to the risk management. And if you really dive into it, probably a good aspect for most people to consider is maybe just start by cutting your size in half. Like out of the gate, if you're sitting there and you're having a problem that you're having a really, really tough time figuring out, maybe just start by cutting your size in half and seeing how it goes from there. I think that's a suggestion that I wish was told to me way earlier in my trading career. And it's actually such a good suggestion that when I'm in tough periods of trading, I like commonly have to even remind myself now. I deeply feel that way. What time is it? 21. All right. I'm trying to be patient. Speaking of chasing and rushing, I'm trying to not do that to myself right now. 605, 603. That got brutally. Remember when I said wait for the retest? Well, what are you seeing right now? I didn't get into it just because I'm kind of waiting for some bars to close.
Order filled. Order filled.
Oh, that was incredibly easy. I took that short on the retest of 600, popped it up from 200 to 300. So thus far, 3 for 3 on the day. And right there, like, okay, is this the most money I've ever made? No, it's not. But also, your boy's trying to be a little bit rehabilitated and really wait for disciplined trades. But also, okay, 300 is good. And it's even better when you multiply it by how many ever accounts I have. So like, I think sometimes, and obviously I'm a part of this because you're watching this on social media right now, but I think sometimes trading is amazing in terms of the community because of social media and how much you can learn from other people. And there's a ton of free content, even what we're doing here. But then I think there's the yin and yang of the whole thing, where there's a bad side where on social media, a lot of people are lying through their fucking teeth. And at first, you might logically appreciate that, but maybe emotionally, when you see all these gains and, oh my God, I took this trade. It's so many people paper trading and they're lying and they're doing it on replay and they're fabricating it, or they're trading on multiple accounts and they're going in opposite directions and they're just showing you the one that works. And I think the presentation on social media of who's good and who's not, it's a really tough thing to sift through because unfortunately there's a lot of liars. But once again, logically I say that and you guys are all like, yeah, Matt, duh. Obviously we know that. But then maybe on the flip side, on the emotional side, when it's like inundating our stupid monkey brains with it, you don't really fully appreciate that. So when it's happening, you're like, oh, dude, someone made 2K per account. I only made 300. It's easy to hold yourself like in some sort of like, I don't know, comparison to some other random standard. That's probably just a lie anyway. So I don't want to call it a standard. And I think that's not really been my issue with social media because I know people are liars and I don't really give a shit about anyone else's numbers. I honestly don't. But when I see numbers, I kind of compare myself to myself where I'm like, oh, dude, I know you've had big numbers. I know that you've gone on streaks where you make $2,000, $3,000 per day. Like, are you really only happy with 300? Where sometimes you just have to be honest. Maybe sometimes the market, it only sets up enough to only get 100 or 200 and you just have to accept it. And I know today this chat's been a lot more about psychology, and that wasn't necessarily my initial plan. It just so happened that a lot of today's setup, it waited. I told you guys, maybe don't chase it because let's think about this. Wait for the retest. Okay, the retest just failed. I took some money. Maybe it's setting up for another retest. Maybe it's setting up, or maybe it's a complete reversal. That's like happening now potentially in real time. I don't know. So you have to be careful about like reasonable expectations in the market. And I think those reasonable expectations are highly distorted by social media. And so that doesn't mean don't use social media because once again, I'll be the first one to admit I've learned a lot from social media. I've learned from a lot of great traders. I've also learned things that were 100% wrong and I was effectively just lied to. That also does exist. So you have to, I don't know, what's the saying? Trust but verify. I think that's a reasonable way for a lot of us to engage in the world of social media retail trading. Trust but verify. And I think a lot of people maybe trust blindly. They hear something and they see doctored photos, bullshit, P&L statements, and they're like, oh, that must work. That's not verifying. Once you hear a concept, you have to go test it. Test it back testing, test it in out of sample testing, test it on your own sim account, see if what you heard that might spike your interest. And that's cool. Hey, like we've all been there. I'm cool with that. But you have to like actually get the real numbers behind it. Only trust the yen. Yeah. If you don't know who to trust, maybe only trust the yen. I'm wondering if this is going to get rejected. And if it is, obviously, I am interested in that play. If this is going to get rejected. If this is going to get rejected. but being patient. I'm not randomly going short right now because it could be a breakout. I don't know. I saw before we hit the 50 and the 100, it got rejected. I saw before it got rejected, but it went above it by 60 points. So you want to wait for that confirmation. I find that front running, I don't know. I've done it and I made money, and sometimes you can get lucky. Yeah, when you're playing poker, you can go all in on a 2-7 offsuit. Dude, Bitcoin's catching a bid. Did you guys see that video of Michael Saylor? Someone wrote in asking, they're like, hey man, I've kind of put like my life savings and my kids' money into this. MicroStrategy is getting beat the fuck up. What should I do? And Michael Saylor kind of had the craziest response ever. Did I like it? I wanted to play it for you, but if I heard this and I knew I put my life saving into the stock because I didn't understand, where are my likes? Does it hide your likes now? What is going on? I guess I could find it. Here, this is it. It's brutal.
All right, let's turn now to the equity side, to the common stock MSTR. We have a question from Rob. He said, I have 3 children and I invested $73,000 each into MSTR, believing in the long-term potential. Today, that $73,000 is worth $20,000, and the long-term potential is now a function of getting back to break even. MSTR common shareholders seem to be your lowest priority. You defend STRC and pay down converts using MSTR at the market offerings. Achieving BTC per share yield doesn't do much for my kids. I have a decade-long perspective, but I'm worried that you will ATM so much that we'll never get back to $3.25 a share. Have you considered paying out a dividend to MSTR common shareholders simply to do something right by them in the near term?
I can start on that, and Mike can add. And Rob, thanks for being a shareholder and investing some money into MSTR for your children. Of course, the common shareholders and MSTR is our most important priority, and creating value and increasing the price of MSTR is our #1 priority.
Increasing shareholder value.
We do that by outperforming Bitcoin. And since the beginning of our strategy of putting Bitcoin on our balance sheet, that was August of 2020, Bitcoin's been up 32%, MSTR has been up 41%. So we've outperformed Bitcoin over time, and I understand that you came in later and haven't seen that outperformance. What happens over time, right? When Bitcoin's up, we tend to go up more because we have more Bitcoin per share, and we do that via historically leverage, and we've done that more recently via amplification. What that does mean, and what you've experienced, is when Bitcoin goes down, we tend to go down more. So Bitcoin's seen a drawdown of 50% from all-time highs. MSTR has seen a drawdown roughly of 75% of all-time highs. Because Bitcoin's our underlying asset, increasing Bitcoin per share increases the value of MSTR when Bitcoin goes up, and we'll see sharper drawdowns. So how do we increase Bitcoin per share? We increase Bitcoin per share historically through leverage, through convertible bonds, and more recently through
gonna play it on 1.5,
which is digital credit and amplification through stretch. And so ultimately, if we want the common to go up,
I just want to get to the Michael Saylor part.
And increase Bitcoin per share means
it's so brutal,
more, which is why it may seem like we're talking primarily about stretch right now, being stretched back to par, but that's what gets Bitcoin per share to go up and MSTR, the common, to go up over time. We're not going to pay a dividend. That's not really the best deployment of capital. The best deployment of capital for us is to get stretch to work, to buy Bitcoin and put it on our balance sheet. And that's ultimately the objective of the company. And so over time, if you believe in the underlying asset Bitcoin, and Bitcoin starts to rise for all the characteristics Mike had mentioned before, then MSTR will start to rise over time. And that's ultimately the goal of the company.
Michael, do you want to weigh in at all on that?
Yeah, what I'd say is if you want a dividend, you should buy one of the preferred stocks. Like STRD pays like almost like 15% effective yield. So if you're looking for a stable instrument that pays a dividend, and I would look to STRC or STRK. They were designed to pay dividends and give some upside. If your time horizon is less than 4 months, you probably should own a money market. If you are making an investment and want the money back, or want to see a good return investment in 4 months to 4 years, you're probably a credit investor, and you ought to consider one of the credit instruments. If you're holding the equity, then you need a time horizon minimal of 4 years, right? Ideal 7 to 10 years. Bitcoin was an all-time high about a year ago. So when we're in a bear market, you're going to get more amplified Bitcoin. So if Bitcoin's down 50%, we're going to be down 75%. And in a bull market, we expect to outperform Bitcoin. So, when you're buying MSTR, you're getting amplified Bitcoin. When you're buying Bitcoin, you're getting on a roller coaster. So if you are going to get on a roller coaster, then probably you want to use a metric that's like a 4-year blended metric. So when we look at Bitcoin, we look at the 200-week simple moving average. And that way we take a 4-year cycle view and we consider how is it trading versus the 4-year average. I think that that MSTR is going to be more volatile than that. So I think the whole point of the equity is to generate the amplification. And so if we were to pay the dividend, we would be actually undermining the equity value proposition, and we'd be undermining the credit value proposition. And the reason that the equity is so volatile is because we sell the credit. And the reason that we're working hard to build a balance sheet is because the company's future is based upon the credit. If we can sell $10 billion a year worth of STRC, and if BTC outperforms our hurdle rate, it's about 10%, 10.5% right now, then the $10 billion of credit that we sold starts to look like net income to the common stock equity holders. So that being the case, you'll get a multiple on the credit sales. If there are no credit sales, then there isn't anything to multiply. And so the single most important thing is for us to stabilize the credit business and to build the most sustainable, highest quality credit business that we can. And so the equity will actually come later. Right, we're in investment mode to build the credit.
5 minutes trying to break out.
That are good for the equity in the near term, they're bad for the equity over the long term.
700.
And on the other hand, if we do the things that are good for the credit in the near term, that will be good for the equity. So ultimately, the product of the company.
We're
is
now in a
credit.
region of resistance.
The better
Can
the
it
credit
break?
is, the more valuable the company is. And
right
we think
here,
the company will be very, very
support
valuable if we make
turning
the
into
credit,
resistance. So
especially
both are
STRC
trying to break
successful.
out. SPX
So
trying to break
we're
out.
making a long-term investment.
NQ trying
It's
to
not
break
unlike
out.
Netflix
Lots
or Amazon.
of wicks right
Amazon's putting
above
out
this.
Amazon Prime. They were providing cheap shipping or free shipping for a long period of time. And people thought it was not great for the equity, but at the point where everybody in the country is subscribed to the product and they all use the product, then Amazon won the market. And our view is the same. We want to win the digital credit market, and ultimately we want to create the world's best credit. And if we do that, then the primary beneficiaries will be the equity holders, of which I'm a big one. I have more than 19 million shares of the equity. So I feel your pain, but I think we have to be prepared to have difficult years.
I
Might be
feel
1 year,
your
it might be 2
pain,
years.
says
we wouldn't
the
think it would be 4
billionaire.
years, but we might have to actually ride through some number
People
of months or a year or
notoriously
two in order to
known
get
for
to the point
feeling
where things
the
start to work
layman's
to the
pain.
benefit of the equity.
Brutal. As a billionaire, I feel your pain for putting all your money in my stock for your kid's future, and it did not work. What a absolutely brutal statement. Brutal statement. I get where he's coming from, Michael Saylor, of like the explanation of what their plan is, but I suppose lack of empathy is a fucking astounding. Is it trying to get going? I mean, it's that decision point. Do we break up? Do we break down? Do we break up? Do we break down? It is resistance. It is support now turned into resistance on NQ. What do we have? 1 minute is trying to go bullish. 5 minute is battling. 10 minute is trying to tag. 30 minutes clearly bearish. 1 minute is trying to hold bullish, but lots of wicks on both sides. 5 minutes bearish, 10 minutes bearish, 30 minutes bearish. So momentum more so is bearish. The shortest time frame is trying to pop its head up. We're going to see. Looking at flow. Flow was really bad until about like 10, 11. SPX picking up since then. You had the Mag 7 picking up since 10, 11. And then the NASDAQ kind of just trending up.
Order filled.
Never mind. All right. I got that short. 4 for 4 on the day. I had a pending short just at the bottom of that. Why? Okay. This is going to be a good breakdown. So why did I feel comfortable just sitting there with this one? Well, generically, like, would I do that in a random sense of just like, oh, on any pop breakdown, am I going to short it? No, I only did that because we came back up into an area that was support. Then we came from under it. My thought was, is this now resistance? And if we break below that range, can I play to the 50 EMA? It happened quick because that bar was quite large. But I just had a pending short because I thought maybe it's resistance. Same thing here on SPX. So it wasn't just the geometry of the chart of highs and lows, but it was the highs and lows as it relates directly to, are we in a key zone? I'm not just going to randomly short a high because we're at a high. Like, is it an important high? Is it a breakout high? Same thing with lows. Like, I cared about this because before it was first support, resistance, overshoot of resistance, The question was, we popped up here, resistance, resistance, resistance. And it just turned out to be resistance. So I had the pending order on the failure, on the rejection. And good thing I wasn't overly greedy because it, well, you saw it on Bookmap above my head that there was buyers at 50. So I locked it in just above 50. And that's how I was able to get up to this. So like, this is kind of, I don't know, what I'm trying to tell myself and then also remind all of you is like slow and steady can win. And I know it's crazy coming from me because you've seen me do things where I'm like playing huge size and I go for a big trend and I make whatever, 4 or 5, 6K per account. That's one way to do it. And sometimes the market environment is set up to do it that way, where it's a big trending day and you just add in, or you get lucky with initial massive size and it works for you anyway. And it just trends from there and like you don't take much heat. Yeah. So there are proper environments. And then there's also an aspect of luck. Then there's other times where we're not trending, which is today. And a lot of little ones can add up. I mean, I know you guys have seen me make more than 400. And do I wish this was 4,000? Of course I wish this was 4,000. But 400 is still good, especially given this dog shit day where nothing is happening. And also on top of that, I'm multiplying 400 out by all these other accounts. So it works, dude. It works. Slow and steady is a very viable strategy. And, whoa, someone just got nailed there on that one. Look at this. Someone just got brutalized in that. Holy shit. I mean, it went up. That's like someone ran into a wall of sellers right at the POC, the point of control. That's a huge. What happened, dude? Someone just got taught a lesson. And anyway, as you can see, right back to support, which turned into resistance. You have some trap buyers. You have some aggressive selling. I wouldn't be so surprised if this cracks 50. And then if it does crack 50, my next target would be 20. We saw people at 20. I'd front run 20. In terms of an if-then statement, if we crack 50 and it's not just a wick, like we're actually cracking it, actually trading it below it, my next target would be 20. And then obviously by that 600, but I would front run the 20 and try to go for like 21, 22, which I mean, that's some aggressive selling. I don't like to predict, but just looking at the order flow of what just was hitting the tape, that was some legit straight up aggressive selling. Let's see how it plays out. There's so much bullshit in this industry. It's so incredibly frustrating. This is what I missed out on. Just in, 13 Penn State fraternity brothers charged with running a major cocaine trafficking ring, with some pledges allegedly forced to cut and package cocaine as part of their indoctrination into frats. That's what I missed out on, team. Your boy missed out on it. What are you using on the left side of your screen? This or I don't what are we talking about? I guess I have a lot of things going on right now. This is Twitter, Ninja, Deep View, Bookmap, Convex Value. I'm trying to think of all my services. Gamma Edge, Spot Gamma. Those are all like the main services that I use. Anyway, this is the people I could have been financial advisors for. Could have been financial advisors for him. Order filled.
Order filled.
Order filled. 500 on the day. 5 for 5. And it's 10:40. It almost makes me wonder if I should call it here, Tonto. Do I want to call it here? Or maybe just one more trade? Folks, just one is just the last one. Just one more trade, double the size, double the profit target. You know, are you guys feeling me? That's how it's just, you could just get locked in with one more. I just need one more, folks, thumbs up in chat if we should just go for one more, just like one little extra trade, one little bonus trade for all the kids in chat. One more trade, all in, just discipline, and then just one trade to rule them all. One trade to rule them all. I think we should do it, Actually, I was thinking about going in on that wick and it would already be down. I don't want to chase it because I liked it better here, the rejection I should have done it instead of like talking shit, instead of chasing it on this wick, which would have knocked me in and I would have been screwed. I should have had the pending short up here at 64. But what if I could make 5K today, What if? What were we doing? 3K from passing, then boom, dead. RIP, take profit. Ugh, that's sad. Nearly 75% of active fund managers failed to beat the S&P 500 over the last 12 months. Outperform the S&P 500. How do 3 out of 4 fund managers just buy the S&P 500? Like, what are we talking about? Did you guys see this announcement from Public yesterday? It's actually really fucking cool. Like, I'm not joking. I tweeted about it, but I actually do want to share with you guys because I think those 75% of active fund managers could be using this.
4 months ago, we launched Agents on Public.
Investing platform Public.com is rolling out AI agents.
Full transparency, I've already signed up for the waitlist directly on the Public app.
Embedded AI agents that work directly within your brokerage account, allowing you to automate trading strategies, move money around, monitor markets, and much more, without having to install new software or set up an MCP. Today, agents are now available to everyone.
No more
both in the
wait
West
list.
And inside the Public app. There's no more wait list, and they're still free of charge.
We're also launching an agents catalog, which lets you easily discover and copy agents made by others. Browse agents across 5 distinct categories: trading strategies, market monitoring, risk management, fund management, and sentiment analysis. When you click agents in the left side navigation of your portfolio page, you'll see the prompt bar where you can define any investing task in plain language. But now you also see a catalog of the most popular agents. Each agent card outlines the exact workflow, whether you want a custom dividend reinvestment schedule or an automated cover call strategy. Just click the card and make it happen.
These ready-made agents are fully customizable too. So let's say you want to set up a buy the close, sell the open agent. Just click into the card from the Agents Hub. You can then adjust any parameters on the fly, like which account you want to use, which ticker, and how many shares you want to purchase or sell each day.
It's so cool.
You can then edit the logic or pause the agent at any point on the web or directly from your phone.
You might have seen that a few investing platforms now let you connect your accounts to AI tools like Claude and ChatGPT. That's great, and we'll let you do that too. But agents on Public are fundamentally different in a few different ways.
They're deterministic.
First, security. Agents live
Yeah, who
natively
cares about
inside
that?
your authenticated Public account. You don't need third-party platforms. Second, agents on Public execute deterministically on the exact
That's the
criteria
big
you define,
difference.
ensuring no hallucinations or sudden unwanted improvisations. Finally, everything is transparent. You can see a full activity log of every agent's decision, so you can easily supervise, pause, and edit whenever you see fit.
Grab a ready-made agent from the hub or prompt your own. Agents are now available to everyone, and we're constantly expanding what they can do.
So no more wait list, and they kind of expanded the capabilities, and it's only possible on Public. I'm not even really partnered with them anymore. I have a good relationship with them, but it like, I guess I'm sharing it because it is kind of like one of the most impressive things I've seen in retail trading in quite a while. And I think it's better suited for long-term investing, not necessarily like active trading, day trading, but for those of you maybe potentially wondering about your long-term like capital management, not the one that blew up, but your actual personal long-term capital management. I think Public is a really strong way to go, especially with their tool suite that's out there. Obviously, my humble opinion, but I'm on it and I've stayed on it for very, very good reason. I just enjoy what they offer. I guess that short was a good short. I could have stayed in. And I would have, what was that short at? Let's play hindsight bias. I was short at 47 and I had 2 contracts. So I'd be up 2K per one. So I'd be up 2.4 thousand. Woulda, coulda, shoulda. Woulda, coulda, shoulda. You guys sent in a couple other things. Let me see. I don't want to be rude and miss what you guys sent in to me. What do we have here? Dystopian. Sam Altman says the next model generation of ChatGPT will see everything the user sees and have perfect context of their entire lives. That makes me feel good.
I think we are close to a world where you can have like a descendant of ChatGPT watch your computer screen all of the time, watch every meeting you're in, like record every call, everything like that, have perfect context of your whole life, everything you see. You choose what information you want it to have, but it can like go, you can connect it to your texts or email or docs or Slack or whatever. And then you have this thing that is not making decisions for you. But if you're like the CEO of a startup, there's always like more stuff to do than you can do, and context you can't all keep track of. You can't like read every piece of customer feedback every day. And you can just have this thing that's like working alongside you. And as you're like typing out a sales pitch to a customer or like writing a strategy doc, it'll just say like, hey, maybe here's another idea, or I think you're making a mistake here. You should consider this, or I can do this thing for you to help. And like this, I think we're only like one model generation away from this actually being incredibly useful. And I think that will change, hopefully, at least for me, change the way I work.
What's your best guess on timing?
Like sometime in the next 6 months.
What could possibly go wrong? I don't see any issues. I don't see any issues whatsoever. That just feels like a thing we need and a way we should run our lives. Jesus. What do we have here? Okay, you guys actually have sent in a couple. And to those of you who send in stuff, shout out. Much appreciated. Well, this one got suspended, so that must have been a really good clip.
They don't change a vote, but they do change participation. And we've seen this now for decades. If people think that their candidate doesn't have a chance of winning, they don't vote. On election night is why we don't do projections ahead of time. We have to get enough of the votes in to make a declaration. And the fact is, these prediction markets are now turning politics into a game, into betting. We already have enough trouble with our democracy as it stands. To add any other component that makes it less serious, God help us. I've said this on this show several times. Our democracy is under threat. The people who are potentially going to lead this country in Congress are at the extremes, extreme right and extreme left. And that's not helpful for getting things done. It's not helpful for making democracy work. And as someone who is a professor, in addition to being a pollster, it frightens me. They don't change a vote.
Dude, these people talk about taking yourself and your job way too seriously. Like, come on, dude. Grow up. Like this, no one wants to be lectured to like this. And whether you're right or wrong, that's not how you get what you want to happen. The lecturing, no one responds well to being endlessly lectured. It's so stupid. Oh, I saw this one. If you haven't, okay, this is a good watch. I saw this one, but exposing the biggest day trading LARPer.
Okay, so you trading stuff? Day trade, night trade, whatever. Oh, nice. All right, I like it. What do you
Me too, brother. Big night trader myself.
trade normally? I can't put you on the drill. I can't put too many people on that.
Fair.
Do you know your broker? Nah. Calci traders have an idea in mind of how much Bitcoin is going to be at the end of the year. How much do you think it's going to be? $100. Yeah. Nice. And what platform do you use to trade? That's too much insight. Then y'all gonna jam it up, and then I ain't gonna be able to use it. Bruh. And like, where do you invest at? Me, I be using like California. Saying I can't give you the drip. It's California and probably Atlanta. What's the most I made? Uppers of 60K. 60K? Nice. And like, when you hit your biggest trade, what were you trading? Apple. And if you had to guess how much one stock of Apple right now is, what would you say? $3? $4 now?
I can't put you on that trip. I actually love that as a saying.
Okay, so you trade and stuff?
In the future, when you guys ask me for questions of like, what's that software? What are you trading? What's your strategy? That's going to be the answer. Can't put you on that drip, man. You guys are going to jam it up for me in my night trading sessions. I can't put you on that drip. Sorry. I wish I could put you on that drip. I really, really wish I could put you on that drip. I'm just not going to. Will Elon win the 2026 Nobel Peace Prize? Probably not, but let's see what the odds are. Is he on it? Zelensky's on the list? The Pope? D. Trump? Julian is outpacing Greta. Xi Jinping should definitely get the Nobel Peace Prize. Elon, no, not even one. Not likely, but the current list, who is Yulia Navalnaya? Probably did something very impressive if I had to guess. What do we have here? This is ironic. Congressman Michael Patrick Guest just disclosed 3 new trades made in December of 2025. The Stock Act requires members of Congress to disclose within 45 days. He's 7 months late. He sits on the House Committee on Ethics. Jesus. The committee responsible for enforcing the Stock Act. That's, at a certain point, we just all have to rage quit, right? We just have to all rage quit when the people who are tasked with enforcing it are the people also breaking the rules. Like, that's craziness. That's absolute insanity, right? Am I the crazy one here? I feel like the crazy one. All right, we're coming up to a little bit of support. Oh, do I want to stop here? 10:53. I feel like I should. We had good money on the day. 500 multiplied by 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Okay, so made 10K. 10K in realized P&L. 10K in realized P&L. It's not a fun 50K, but hey, 10K is 10K. 10K is 10K. Right at support there. I probably should. I feel like this is just choppy nothingness. Netflix is going up. Bitcoin was going up. Micron getting hit. SanDisk getting hit. This is just a bloody day, team. It's a bloody day. It's a bloody choppy day, too. Just a bunch of nothing. A bunch of nada, team. Scalping today, I scalped because we weren't trending. There was no trend today, so there was no way to really being a trend following trader, if you ask me. Oh, I wanted to trade that so bad, and I think I would have already got my fill. I was looking at this book map thing, and the buyer's at 50, so I thought if I trade at 60 and get out at like 52, should be good to go. And it would have already hit my fill. Yeah. What is the best scalping in these days? What do you mean the best scalping? The scalping that consistently makes you money. Like you're saying, asking for like this specific strategy. If I had to define it, I would say identify a larger time frame trend, whichever you like to use for the larger time frame, and then on a smaller time frame, obviously relative to that larger time frame, wait for the reversal and then pray it snaps back in trend. Is probably the best way that I would describe it. If you haven't already, sign up for TPT. I know we've talked a lot about TPT. Obviously, I'm trading on TPT. I have 5 of them. Actually, one of them is funded. But on TPT, for this week only, they are doing 50% off, and they're doing it to celebrate the fact that evals can now be passed in 3 days instead of 5. So no more 5-day wait period. It's only 3 days if you have the profit target. And to celebrate for this week only, it's 50% off. So if you like TPT and you want those accounts, this is your time to get it. Once again, 50% off. Generally, they'll do 30%. Sometimes it's 40%. But right now, it's a 1-week period, 50% only. And of course, code Goonie. You could just go to Take Profit's website. You don't have to use a link. I did link it. But if you want to just go to the website, you just put in that code Goonie, enter it, and you will get the deal. Goonie. Damn, this is really pressing. Matt, if you could only choose one prop firm, which one would it be? That's impossible to answer because the rule set is going to be favorable to different types of traders. Obviously, there's some people who like the daily payouts and the no consistency. There's other people like it depends. It depends on your size. And are you a mean reverting trader going for little scalps, or are you a trend following trader? So the best prop firm is dependent on what type of trader you are. And then for me specifically, I have strategies to take advantage of both styles. So that's why I'm on all these accounts. And if I'm trading well, or what I could do is fully automate all the systems and then just apply these systems to the right accounts on the right firm. But I would say it's impossible. I think it's possible to say that there's certain firms that are straight up shitty. I think there's ones that, regardless of your trading style, are really, really bad. Like, who's the recent one that rugged everyone? Alpha Futures. They just destroyed the premium account. They rejected the payouts. There's a huge community uproar, yada, yada, yada. So there's ones that, like, regardless of what type of trader you are shit. But then there's ones that I would say are firms I trust. And then what's the best amongst the ones that I trust? I would say it changes per day because you have to look for the best deal and also the rule set that is reasonable with your trading strategy. So I wish I could give you a straight up answer. I could give you a straight up answer on the bad ones that you shouldn't use in any regard. But if you come to me and you're like, Matt, I'm a trend following trader. Well, okay, you're going to want one that's end of day drawdown. If you come to me and you're like, I want daily payouts and I'm a scalp trader, it's like, okay, well, we'll do a daily payout one, such as TPT or MFF, where you could scalp trade it and you don't have to worry that much about intraday drawdown. We can definitively know the shit ones, the best ones. It's how do you trade? I would need information on that. Speaking of that, what time is it? Oh, it's 11. Well, I guess I should stop. I already thought I was kind of like maybe pushing the pedal to the metal too much. There were about 2 to 3 more trades that I really wanted to take that would have hit that I just didn't take. So, this could have been a bit better. I feel like if I was on the ball a bit more, this probably would have been in the realm of 700 per account, which would have been nice. But hey, instead of making 14K, I made 10K, but I shouldn't be mad about that because green is green. So I just need to do everything in my capability to going back to being the disciplined Matt that I was previously and just shut her down. So I think that's going to be my plan. If you haven't already, on your way out, could you guys do me a huge favor and smash that like button? Don't forget to subscribe. If you want to sign up for an account, TPT, use that code Goonie. If you want to trade with me, GoonieTrading.com. And then other than that, folks, that's what I have for you. It's kind of a crazy Tuesday. The big movement was obviously the overnight action. Since the market really started today, it's been nothing but chop sideways. This is a boring day. I got some of my money, and I think these are the type of days that if I keep doing it, keep trying to force it to be a day that it's not, I just give it back. So knowing this type of setup, the actual trend that we have, or I should say lack of trend, and then also just like where my account's at, where my mentality's at, this is a day that I just have to walk away. I need to stop it here. I made money on a shitty day. I just need to be happy that I made money and have the self-control and discipline to walk away when the walking away is looking mighty nice. So that's what I'm going to do. I'm going to hang out in the Discord a little bit. I'm going to check my swing plays and options. And other than that, I'm just going to do what I can to not trade. That's so crazy mentally if you think about it, that sometimes the hardest thing in trading is to not trade. Like there's no other job where you're like, yeah, it's what you have to do right now is do nothing, and that's the hard part. Like literally just sit there and do nothing. Go watch TV, go watch Netflix, go for a run, go, I don't know, go for a drive, go play with your cat, like do anything. But what's so crazy about trading is sometimes that's like literally the best answer. The best answer is to do absolutely nothing. And if you're new to trading, you might be laughing right now thinking like, how is that hard? Well, tell me in a month or two after you've done trading of like, it oddly does become the most difficult thing. It's just to walk the fuck away. So I'm going to see if I can find that discipline within myself today. Walk away, keep my 10K, and I'll catch you guys on the flippity flip. I appreciate the vibes. Peace.